Netflix will pay you $65 to work from home remote. Get amazing benefits like a free subscription with all the upgrades.
There you go. All righty. So, let's start this video input. Uh-huh. Well, now that looks like fun, doesn't it? Crap. All right, so let's do streaming. Hey, Jessica's here. Whale, Amazon, Real Estate Flipper. What's up? Jessica King, Papa Ma, Noise Miranda, Nirvana. Interesting name. Navarro, Brettfish, 1973. That's a weird name. Brettfish, 1973. Okay. We're getting ready to get started. Oh, my cough drop. What's up, Renee? Jessica King, every day. Woohoo. Oh, so we're started. Cool beans. Hey, everyone. This is James from Dividend Stock Talk, brought to you by the 10-Minute Trader, where I invest in dividend stocks for weekly cash flow, taking you along for the journey for safe, predictable, consistent 1% per week. Now, I use nothing but pre-qualified dividend stocks. Those are companies that have consistently increased their dividends for 20 years or more. And you might be asking the reason why do I do that? Well, my money, my rules. I like to invest only in companies that are consistently profitable. And if you're consistently profitable, well, you share your profits with your investors because that is what you do when you have a company in a public company. So, now, we checked the other day, 9,597 companies, most of which do not share their profits, so I want nothing whatsoever to do with them. Out of those 9,597 companies, there's only about 300 that fit my criteria. My criteria is very strict. I like safe, predictable, consistent 1% per week. The only way I'm going to get that is by a company that consistently increases their dividends, and we take a look at those. So, before I get started, let me tell you quickly how this trading strategy came about. When my daughter was 9 back in 2008, she wanted to trade also, so it had to be safe, predictable, consistent, and no way to lose. In order for that to happen, I had come up with 5 rules. Never buy something you don't want to hold long term. Never sell at a loss. Make sure the company has 20 years of increased dividends, weekly options, and then make sure the numbers work. What do I mean by make sure the numbers work? Well, simply put, what am I buying it for? What am I doing a covered call for? How much am I bringing in? What kind of a profit is that? And then we move over to the charts. First thing I want to see in the charts, where's the high? Where's the low? Where was it a year ago? Where is it now? In what direction is it going? That's that 5 things I want to take a look at. So if everything looked good, then I jump in. Tell me what you think about EOG. First on the list, not even a hi, hello, how you doing, Flipper? You could have at least said hi first. EOG. Here we go. First one on the list today. Oh, it's going to be a big fat no. The reason why it's going to be a no, look at this right here. It's at a 30-day high. What happens at a 30-day high? More than likely, Baby Junior, how you doing? More than likely, hi, Julie. More than likely, after a 30-day high, you're going to have profit taken, the stock's going to come down. So I want nothing to do with that whatsoever. Well, hey, Real Estate Flipper, how you doing? So, other than that, let's take a look at the numbers for EOG. 133.55, I'm going to look at the 133.50s, 70 cents. That's a no. I mean, that's not even 1%. No. Sorry, EOG's a no. Hey, Wade, how's it going? And then Sheila. Hello again, Sheila. Me and Sheila had a nice long conversation this afternoon. Nice. Zen. Hello. What do you think about PLTR? PLTR is going to be a no. Secretariat Macy's. Oh. Now, PLTR is a no because they don't have consistent dividends. But what happened with Macy's today? Did anybody see this? Late person here. Hey, Macy's, what should I do? Dave, thanks again for your help. All right, Miss Sheila, I did. All right, I got more Macy's today. Well, wait, I got more Macy's today too, because there are several reasons why. Now, when I saw that drop this morning, the very first thing I said, well, take a look at the channeling. She's been channeling for the last 7 months. Okay, between 18 and 20, it's just going sideways. And I hate that term, going sideways, because stocks go up and they go down. They parted ways with an investor, probably. Time to buy Wendy's. The dividend is far too attractive to pass up. Shirley, how you doing? Okay, Bark B all the way. Bark B all the way. I have no BRK all the way. I have no idea what that means. What is Wendy's ticker symbol? And if Wendy's is that good, why have I never seen it? Does Walgreens cutting dividends past year give you a pause? Badfish, not really, because they've been in business for so long. They've been in business for over 100 years. They get 8,700 stores. I'm going to give them the benefit of the doubt for a little while. Zen EPR. EPR. I'm not quite sure I've ever heard of EPR. Now, I've been doing this for 20 years, but I'm not sure I heard of EPR. But we're going to take a look at Walgreens, ASTS. Remember when I came here and said by ASTS, when I was at $2.70, no dividend, but look. No, I don't. Sorry. ASTS, it's $2.70. It doesn't have a dividend. It's not what I'm looking for. It may be a great company. It may have gone from $2.70 to $20, $30. I honestly really don't care. You know, good for you if you took advantage of it. Wonderful. I'm not in a position to take a risk. Yet, IMMR is making new 52-week highs. Okay, time to tell? Yeah, it's not on my list either. Okay, the only stocks I look at are companies that have consistently increased their dividends. They're consistently profitable. That's the only ones I want to look at. You guys can do whatever you want, but when you ask my opinion, I'm going to give you my honest opinion. So ASTS, it's a $2.70 stock. There's no way they're going to have 20 years of increased dividends. So it's going to be a no. Sorry. Badfish, WBA, yeah, I give them a little leeway. You find that certain companies I give a little leeway. All right. EPR, we'll take a look at. Simone! We're about to take a look at Macy's right now. Let me go a couple more of these questions. LGVN, that's going to be a no. IMMR constantly profitable, you said you don't like because they don't do weekly options. Well, if I said I don't like them because they don't have weekly options, then I don't like them because they don't have weekly options. And I don't know what's difficult to understand about that. I mean, it's my rules, it's my money, and this is what I do with my money. I don't give any advice. I'm just taking a look at what you guys are coming up with and giving my opinion. See, my opinion, if it doesn't have weekly options, it's going to be no. They can be increasing dividends, but if they don't have, it's really simple. 20 years of increased dividends and weekly options. There's 300 companies. I'm definitely not looking for 301 and 302, especially when 301, 302 don't match the criteria I'm looking for. I want consistent profitability. Okay, 20 years, great, that works for me. Weekly options, I want to check every week. I don't want to check every month. That doesn't work for me. Okay, it's honestly that plain and simple. Okay, you come to a store and it says open 9 to 5. Well, if you're there before 9, you're not going to get in. If you're there after 5, you're not going to get in. Same thing applies here. If it doesn't have 20 years of increased dividend, don't even want to bother. That doesn't make them a bad company. I did not say that. I did not say it doesn't make them a bad company. They could be the sweetest, nicest people in the world. They could be my neighbors for all I know. I don't know who the company is, It's not where I want to put my money. It doesn't fit my criteria. Okay, my criteria is 20 years of increased dividends and weekly options. It's actually that simple. All right. Where were we? Lockheed Martin. LHM. Sorry, sir. What indicators affects the U.S. dollar currency? Don't know. Jessica, did you buy Macy's dip or will you wait for a bottom? No, I took advantage of that situation. Yes, I did pick up some Macy's today. Thoughts on LGVN? LGVN and LCID. LCID. All right, Zen, we'll take a look at those in a little bit. THU DNA snakes, bye bye coup for understand. Okay, all that. I have no idea what that means. What's my favorite dividend stock? Well, that would be Macy's. Get some more of these questions. What's happening with Apple? All right, well, we'll look at Apple today. AAPL, that'll work. Wendy's, WEN. WEN. You know, funny thing is, I've never looked at Wendy's stock before. There's probably a reason. Which stock you have made the most money on? Macy's. I just turned 18. Should I start investing in stocks? Evan, I can't really tell you what to do. IGVN just did reverse split. That tells you, yeah, no. LGVN just did a reverse split. Why are you suggesting that to me? All right, so Evan, my thoughts on that. You're 18. You want to trade? You can have all my money. You have everything I have. I'll be 18 again, and you could be 60, brother. You got the whole world ahead of you. There's so much to do. Just keep your eyes focused on what you want in life. Okay, it was written in the Bible over 2,000 years ago. Ask, you shall receive. Seek, and you shall find. I'm not doing religion. I don't do politics. I don't do any of that crap. But you're 18. You got the world on. You get the world on a string. What song is that? I forget that one. I did buy a right on CVS. All right, Badfish, cool. AVGO. If Nancy Bullet buys it, then I'm buying it. Can't go wrong if you're following old Nancy. What's your favorite dividend star? I don't have a dividend star. Stock. Oh, that'd be Macy's. What software sources do you use do your research? Mystery Toad Crunch. This behind me, hold a second. Boeing is forming head and shoulder puts. Okay, thank you for that. This behind me, it's not software. This is a trading platform called Think or Swim. It's almost like any other trading platform, except for this one has a lot of perks, a lot of things you can buy, a lot of things you can do with. Ooh, wait a second. Did anybody check and see if YouTube is up and running? Okay, this screen right here is live on YouTube. Can somebody check and see if it's working? Okay. Thank you, Johnny. Wendy's is the monthly. Okay, so I don't know who suggested Wendy's. Wendy's is going to be a no, so I'm going to cross that off. That's probably why I've never looked at it. Lucid doesn't fit the strategy at all. No dividends. Well, that answers that question. LVGN's a no. Lucid's a no. Wedge no weekly. Thank you. What do you think about? Did he just really say that one? He did. HG Boss. SPYI. No. QQQI, no. They don't fit the parameters. It's not what I'm looking for. I'm looking for consistent increases in dividends, which means they're profitable consistently. And they have weekly options. I know Spiders has weekly options. The Qs, I'm not quite sure about. Sounds good? Cool. Dell has EX dividend on the 23rd. Any opinions? I actually have some Dell. VLO 3.7. We'll take a look at it. So what happened with Macy's? We haven't gotten to Macy's yet. I'm answering all these questions. You guys keep hitting me with questions. I can't get to the stocks. Okay, 3.7. That was VLO. Valero. I like Valero. Ford. I love Ford, but I got to hold off on Ford because it's way too overpriced at the moment. Randy, you have Macy's stock. Cool. Wish I bought at 12. Hey, that happens. YouTube is working great. Thank you. Boeing. Boeing's going to be a no. Didn't they cut dividends recently? OMG, this old dude just farted. All right, lady, that's lovely. Thank you for sharing. I'm not sure we all needed to know that. Today about CVS, Valero, EOG, ABBV, don't know. Now don't change. All right, Flipper, I'm just going to ignore all that. Can you break down dividends? Anthony, I'm not quite sure what do you mean by break down dividends. A dividend is nothing more than the investors, that's you and me. When we buy stocks, we become investors and we get to share in the profits of a well-run company. Now, I only like companies that have increased their dividends for 20 consecutive years. That means they've been profitable for 20 years. Okay, so you either invest in a company that gives dividends or invest in a company that's what is called capital appreciation. That means you put your money into the company and the stock rises faster. Well, that's not what I'm looking for. I'm looking for a safe, predictable, consistent 1% per week. And it works so well for me. I average around 1% per week. Now, does that guarantee you're going to do it? No. Before we go on, let's do a little bit of disclaimers. Got an email saying that I should probably concentrate on some disclaimers. I don't want you guys getting the wrong idea. I'm not an advisor. I'm not an accountant. I'm not a tax professional. I'm not a professional in any way whatsoever. The only license I hold is a driver's license, and that's it. Thanks, man. Keep up the great breakdown. All right, you got it. So, if you're looking for advice, this is not the place. I don't give advice. I don't make any recommendations. I take a look at stocks. I read the numbers that are available, and I just give my opinion. It's my opinion. Okay, we're all adults here. I suggest anyone and everyone take responsibility for your own time, your own action, and your own money. All right? If I say something about Macy's, do some research. See if it's true or not. Other than that, I'm just going to read the charts, and I'm just going to read the numbers what I see, and I only show one trading strategy that I do. I have 6 different accounts, and I only show 2 of them. Now, this strategy just so happens to have come up when my 9-year-old daughter wanted to do the same thing I was doing back in 2008. Now, I've been trading for over 20 years. Ever since I came up with this strategy, I've been using this one almost exclusively because it just works. How many screens do you use to make it easy on yourself? I use 1. I want to follow your advice. It's not advice, Brand. I got to correct you. It's not advice. I think your opinion is valid. Well, I appreciate that, and I thank you very much. But I don't give advice. All I do is I read numbers, and I tell you what I'm going to do. Okay? I don't tell anyone what they should do. Do I day trade? No. Swing trade? I suppose you can call that. Anthony, long term for me is 30 days. You got that, Brand? All right. I'm glad we're seeing eye to eye. I don't want to take responsibility for anybody whatsoever. Let's talk Macy's. I thought that until Macy's took a dump. Well, there had to be a reason why. Does anybody know the reason why Macy's dropped? Other than the fact your guidance is cool, though. Thank you. Do you pay attention to how Congress people trade? No, I don't. Mike, QQQs, no. Macy's Pie is 515. I have no idea what that means. BCE, never heard of them. BCE. I'll write them down and take a look. Just paid a dividend. Long term for me is 1 week or even 3 days. Okay. Macy's, no takeover. Okay, good. So there's no takeover for Macy's. So they're just holding on to it. I said no to the buyout. Cool. That's probably why they dropped. Now, do you think that... Now, I remember a couple of months ago, they had a buyout offer. They refused, and they said if they had to, they will turn around and they will buy back all the shares at $24. Okay, that's when it was at 20, 21, 22, somewhere in that area. There was an investor that offered to buy Macy's for $5 billion, and they parted ways. Wells Fargo, Macy's, Siri, MPW. Hey, Doc, that sounds an awful lot like what I have. Walgreens, Wells Fargo, Macy's, Series, MPW. I think I have all of those. What a coincidence, Doc. All right, let's take a look at Macy's and find out what's going on. So, as I said earlier, okay, 1697. First thing I always want to see is what am I paying for it? Well, actually, before that, hold on, stop for a second. It takes less than 2 seconds to see where's the high, where's the low, where is it right now, where was it a year ago? Okay, so where are we? We're right here. Well, the high's up here, and the bottom's down here. Great, I'm somewhere in the middle. Fine, let's go to the chart. I mean, to the numbers. If I'm buying it at 1696. If I'm buying it tomorrow morning, if I'm buying it tomorrow morning at 1696, the closest strike price is going to be the 17. All right. If I sell the 17, so if I'm buying it at 1696, I'm selling it for 17. What am I collecting? And I'm not talking about the 4 cents difference. I'm not talking about that. I'm talking about the covered call. Using the call option, I'm getting 35 cents per share. Now, 35 cents per share doesn't sound like a lot. Okay, DJT is going to be a no. I got 20 years of increased dividends. DJT's hasn't even been in business for a year yet. All right, Apple's on the list, so just hold tight there, Kellen? Yeah, Kellen. Okay, so hold tight. So, and did it again. 1696, selling it for 17, grabbing 35 cents. 35 cents is 2% of 17. Okay, so it's a little bit more than 2%. Great. Now I want to see the chart. The high, the low, where was it, where is it, what direction it's going. Great, the 1 year looks fine. Senor Angel, I don't do Amazon. Amazon does not pay dividends. Amazon's a big fat no. Why is Macy's P&E so high, 566? Bad fish? That's a good question. For this trading strategy, I don't concern myself with the P&E. I know that may sound strange. You may not quite understand because you're relatively new here. All right, so let me explain what I look for, and then we'll go from there. Bad fish, you ready? Number one, Macy's is over 100 years old. They have name recognition. What's happening to Macy's? Pepe, we're looking at it right now. This is Macy's right here. We're looking at Macy's right now. So Macy's has some huge name recognition. They could just sell the name and rake in a big fat chunk of change. PE is high because Macy's profits only 3 cents. Oh, that's interesting. Let's take a gander at that. We're going to go over to Yahoo Finance real quick. Statistics on Macy's. Waste management. Ooh, I like waste management. WM. All right. Macy's at 1685. Market cap 5.2 billion. Enterprise value 10.4 billion. Trailing P&E 636.33. I don't know. I did that. Forward PE, that, blah, blah, blah. Pay. Price of sales 22 cents. Price book 126. Enterprise value 44. Enterprise blah, blah, blah. Fiscal ends in February. Most recent quarter. May. Profit margin 0.05. Operating margin 2.97%. Return on assets a little less than 5%. Return on equity. Revenue 23.6 billion. Revenue per share. Revenue per share $86.17. You see that? Revenue per share $86.70. That's a lot of revenue per share. Net income, diluted earnings per share 3 cents. Okay, that's probably where we got that from. Total cash under management 800 million. Total cash per share $3 per share. Okay, book value 15.14. Okay, so if the book value is 15.14, the sale price is $16. It's a hell of a lot better than Nvidia. Nvidia is $121 for the stock price, and at $2 for the book value. So if you liquidate everything that Macy's owns, liquidate everything, you're going to end up with $15 per share going to all the investors. Do the exact same thing with Nvidia. Kohl's is down. We'll take a look at Kohl's. I think I bought some Kohl's today too. All right, let's get back to where we were. Let's finish up with Macy's. All right. Now, we saw the high, the low, all that kind of nice new stuff. The last 90 days, here we go. Look at the patterns. Here's your high, here's your... Let's disregard today, okay? Here's your high, here's your low. Here's the flow. Down, up, down, up, down, up. Now she should be coming down. But you notice she's staying in this range right here between 18 and 20 for the past 7 months. They call that channeling. I have no problems with Macy's whatsoever. They've been in business for over 100 years. Inspire me more. How you doing? So let's take a look at seasonality for Macy's. Yeah, I'm going to want to get out of Macy's pretty soon. Hold on one second. Here's where we are at the moment. Okay? Here's where we are right now. It should be in an upward trend for the next couple of weeks. But, Reggie, Macy's deal to privatize fell apart today. Yep, I saw that. Oh, wait a second. Now, I don't mind holding Macy's, but for only a couple more weeks. Check this out. Here's a seasonality chart. Okay, she comes down, she dips. We took the dip here, remember that? Okay, now we're right about here. She's going to go up probably to the beginning of August, maybe mid-August, and then she's going to start to drop. That's where I don't want to carry it in August, September. I'll start looking at Macy's again in October. Now, seasonality, if you don't know what it is, the blue line represents the movement for this year. Okay, way over here to the left is January 1st. Over here to the right is December 31st. Okay, this is this year, the blue lines. The red line represents the last 10 years average movement. Lou William, how are you doing? 10 years worth of data. So that's 2014, 15, 16, 17, 18, so on and so forth for 10 consecutive years. And it is the average movement. Facebook phone's just not turning on. I don't know why. What stock are we evaluating? Lou, we're looking at Macy's. Had a big dump today and we want to know all why. So I did buy some Macy's because when you're in the stock market, you're going to make money more times than not when you buy low and sell high. Well, if we go back just a little bit, Macy's has not seen $16 since the beginning of December. Okay, she hit a low at $11 back September, October, November of last year. Okay, September, October, November of last year, she shoots up and she starts in December, starts channeling sideways. Cool. Well, this is the first time she's dropped. This is the lowest it's been in 7 months. So of course I'm going to jump in and buy some. I like Macy's. Finding the price floor can make people a lot of money. Yeah, Lou. Now, normally, I like 2 days to the upside. But this thing has been channeling so nicely all for the past 7 months. I have no problem whatsoever getting it. It's I forget where I even bought it at. Hold on a second. Yeah, so I got quite a bit of... I did. I got quite a bit of Macy's on that account. What is the other one? And I got Macy's on that account too. Okay. Nice. 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 Okay. So no problem whatsoever. Called Mera 25 on Sunday. It's not doing... It's not done, y'all. What are we saying about WBA? Pepe, we haven't done Walgreens yet. We are going to get to Walgreens sometime today. Oh, wow. Facebook wants to start up now. Well, let's get them started too. You may want to look at Intel. Premiums are solid. Thanks, Reg. INTC. Intel, we'll take a gander at that. Let's take a close look. The last 30 days for Macy's. Now, today's the 15th. So I want to go back to 6. Here we go. Last 30 days. Nothing extravagant. Okay, 30 days ago we're 1850. She drops down here, pulls up, drops down, shoots up, drops down, pulls up, and then this big tank right here. Yeah, I bought me a bunch of those today. So you have Macy's 19 or more. Hold that thought. I have Macy's in 4 or 5 different accounts, so I have no idea which one we're talking about. I believe Macy's issue a dividend, a nice entry point prior to the EX date. Gives the investor $2. All right, Lou, thank you for that. Okay, I'm signing on to Facebook over here. I moved the Facebook phone, remember, 3 times it's dropped onto my computer. It just messes everything up. Come on. All right, so that's Macy's. Now, what other ones we want to take a look at? We can pick up from yesterday. Nike. Ooh, Nike. What's going on with Facebook? It doesn't want to cooperate. Lou, I meant 2 possible sources of income from dividend and stock appreciation. All right, Lou, I appreciate that. But I'm looking for I'm not looking for capital appreciation. Really, I'm not. Stock appreciation, I'm not looking for that at all. I'm only looking for a safe, predictable, consistent return on my money. CVS is on our list today. Take a look at today. Dell is on our list to take a look at today. Ark House announced today about Macy's. Just Google it. Okay, that works. All right, so Facebook is live now. All right, about time. All right, V, you want to look at Tesla? Nope. Tesla doesn't share their profits. It's a big fat no. Sorry. It's just the way I feel about companies that don't share their profits. I want nothing to do with them. All right, that being said, next on our list, LUV. Oh, Nike. Yeah, we want to take a look at Nike. How's Nike responding to all this fun stuff? Ooh, a new bottom for Nike. Imagine that. Look at that. Now, we thought... Hey, Rocco, I'm in the middle of my podcast, dude.
Okay.
Come on over and say hi. All right. I'm going to wait. Now... Lou, VST has been doing tremendously this year. VST. Now, I only have a minor problem with VST there, Lou. Okay, I've been doing this for 20 years. No, yeah, for over 20 years. Which means I've been looking at a lot of stocks. And the only stocks I invest in nowadays are dividend stocks. Specifically, dividend stocks have consistently increased their payments to their shareholders for 20 consecutive years. VST, never heard of them. Sorry. I'll tell you what I think once we get to it, because I got a long list. I think we're right here at the moment. Okay, so I got all these, and then I got all those. All right, so no to Nike. Nike had this big drop. Look at that. Okay, we had this big drop down here. I bought some down around here, some Nike. Okay, but it kept drawing lower and lower and lower, and today we have a new 30-day bottom again for Nike. There are newer companies that does issue dividends. Lou, you're absolutely 100% correct. Okay? But you want to know something interesting, Lou? Let's say, hypothetically speaking, you have company A and company B. Let's say company A has been in business for 100 years, and they're consistently profitable, and they've increased their dividends, the share of the profits to the shareholders, for 20 years or more. Okay, great, lovely, that's what I like. Now we got company B. Let's say it's 3 years old, and they just started sharing their profits. Or they're 5 years old, and they still have, sharing profits. I still would prefer a company that's 100 years old and consistently increasing dividends for 20 consecutive years. That's me personally. Right? Now, there's over 300 companies that are close to 100 years old and have consecutively increased their dividends for 20 years or more. And that's more than enough for me to look at. EXR, Alex, I never heard of them. EXR. How far off the monthly high has to come down before you buy it? Ooh, Flipper, good question. For that answer, let's take a gander at a few and see if we can find one. That being said, so Nike, I'm a little disappointed because I really thought this was going to be the 30-day bottom, because I get a 30-day bottom, 2 days to the upside, great, but nope, pulled back, proved me wrong, is what it is. So Nike's a no. LUV, Southwest Airlines, LUV. The cough drops seem to be helping, but I hate taking cough drops because it's like one after another after another. What is the app that you are using, please? All right, V. It's not an app. This is a trading platform. This is where I actually make my trades. Think or Swim, which is available through Charles Schwab. They went from 23 in 03 to 106 in 24. That's some serious appreciation. You're absolutely 100% correct, Lou. That is some nice appreciation. But here's the thing, Lou. How many other companies were sitting side by side with that company with consideration? So you have this company. I have no idea who the company is. Really don't. Okay, and we can argue this back and forth for hours. I have criteria for my money. Plain and simple. 20 years of increased dividends and weekly options. Other than that, I have no desire to look. I'm not looking for capital appreciation. I'm just not. I'm 60 years old. I'm retired. I don't want to put my money aside and wait a year to cash out. No, no thank you. An allergy pill works wonders for postnasal drip cough. Julie, you're absolutely 100% correct. I can't stand pills. I don't like the side effects. There's always a side effect to something. So I'll just deal with it. And it sounds weird, but it is. How's Macy's doing? All right, well, we already looked at Macy's. Okay, we already just figured out that Macy's had a big drop because of the investors walked away from the table. You know, Macy's says no. Fine. They have the ability to do that. They've been in business for over 100 years. The management has been there, and they have been successful. Yeah, the whole world is having issues, so they're having a couple of bad years. Big deal. Every company has a couple of bad years. All right. We're looking at Southwest Airlines. First thing I always want to see, quick glance. Yep, we're good here. $27.84. That's what the purchase price is. The closest strike price is going to be the 28. The 28 is going for 33 cents. That's well over 1%. That's what I like. 1% consistently, week after week after week. That's over 50% per year if you do it right. KB, how are you today? Fish hooker. Fish hooker. Cool. All right, Cal Kern, TSLY. No. Sorry. TSLY just doesn't work. TSLY. It's a monthly. You know what that means? There's only 12 months in a year. It means I'm only getting 12 checks. I can do dividend capture. No, I can do covered calls 12 times. No. I prefer weeklies because I can do it 52 times. Now, I prefer 52 checks over 12. It's just a numbers thing. You know, if you want to do 12, fine. More power to you. To me, it's a no. BTG. Who is BTG? BTG. Yeah, that's going to be a no. ISACC. Are you kidding me? ISACC? Can't find that symbol. That's a no. Ooh, APA. That is Apache. APA, nope, it's APA Corp. Yeah, Apache, I was right. Ooh, we missed that opportunity this morning. Philip Morris and Altria. PM and MO. WMA. What is WMA? I never heard of WMA. Fish hooker, we'll get to it. Okay, right now we're looking at Apache. All right, Apache's gonna be a no, so we might as well just skip through it. The reason why it's a no, look at this big jump that happened today. Okay, here's your 30-day low. No, wait a minute. Here's your 30-day low over here. Last 30 days, right there. Check it out. 30 days ago, 30-day bottom, 30-day top. More than likely, there's going to be profit taking that tomorrow for those of you who like puts. PFE, Pfizer, Mara. Ooh. M-A-R-A. And Pfizer, PFE. P-F-E. Cool beans. All right. We're looking at GYN. All right, Cal. Snow's a no. Sorry. I'm just going to save time. Just going to save time. Snow's going to be a no. Intel. Here we go. INTC. INTC. So, when your stock like M drops suddenly, do you still sell lower calls today or wait for a rebound? Well, Secretariat, it dropped. I bought a bunch more. So I could dollar cost average down on it. And I think I'd sold some puts on it too. It's nice fat puts too. Because I like it. Don't get me wrong. I like Macy's. I've been trading Macy's all year long. What about Shop? No. Never heard of it. If I've never heard of it, more than likely it's going to be a no. I've been doing this for 20 years. Like LVS, no. MGM, maybe. Win, I actually have some win. We're looking at LVS right now. I bought more too and sold calls, talking about $19 a share. Well, there you go. All right, CMG, we are going to look at Pfizer in a little bit. Wade Construction, how are you doing this evening? If you ask me my favorite dividend stock this year, it's going to be Macy's. I've made more money on Macy's than any other stock this year so far. You never heard of Shopify? Well, of course I've heard of Shopify, but you know what I haven't heard? I haven't heard that Shopify has 20 years of increased dividends. How you like that? So, it's a no. 20 years of increased dividends. That means they've got to be in business for at least 20 years. And I'm pretty sure Shopify has not been in business for 20 consecutive years. I don't think so. Intel. Let's get back to what we're doing. We're looking at Intel. First thing we're looking at, 34.58. The 34.50s, nice, 60 cents. That's more than 1%. That's what we're looking for. Or I should say, that's what I'm looking for. More than 1%. Here's the high, here's the low, here's where it was, here's where it is, and here's the direction it's going. Let's move on over. A much bigger pharmaceutical company, AbbVie, they issue dividends. Well, Lou, AbbVie is on my list also. Okay, and I'm pretty sure, okay, correct me if I'm wrong, Lou, but there's no AbbVie drugstore here in Sarasota. But there are CVS's, there are Walgreens, there are Walmarts. I can't think of any more. AbbVie may be a good pharmaceutical company, but they're not on the streets of America. And it is on my list. NAL, Steve, sorry, never heard of NAL. NAL, I'll take a look at it. All right, we're still looking at Intel. PHG, really, Timmy? Rite Aid, NAK. NAK, never heard of that. PHG, never heard of them. All right, so let's move on. So we're looking at Intel at the moment, right? Current Rad is bankrupt. Okay. They are the sixth largest biomedical company revenue. Yeah, AbbVie. I'm well aware of that. Macy's is a retail store that they can't be doing well um, against Amazon. Well, NLST. Never heard of that one either. Steve, what are you getting yourself into? NLST, Steve, with 100,000, what return could I expect? Well, CMG. When I say 1% per week, 1% per week. There's 52 weeks in a year. 1% per week comes like 52%. So 52% of $100,000 is $52,000. Now, if you compound it, it's going to be 62. But if you take the dividend, if you take the premiums out and you spend that like I do, I spend mine because that's what I use for my retirement. That funds my retirement. My little nest egg, okay, 1% of that every week funds my retirement. It pays for my gas, it pays for my phone, it pays my bills, and it allows me to live a nice, comfortable life. It's something interesting and nice and comfortable about waking up when I feel like waking up and doing what I want to do. Today I went to my mom's house, mowed the lawn, trimmed some hedges. Mom was happy. I came home, went swimming, and had lasagna for breakfast. All right. Fifth Third Bank is doing pretty good the last 5 trading days and just issued a dividend. Okay, we'll take a look at it. How big is your portfolio? Alex, my portfolio is big enough to keep me comfortable. How's that? FITB. Fifth Third, FITB. All right. We're looking at Intel. Let's stay focused. All right. What dividends pay 1% per week? Okay, Esther, you don't pay attention very well. Do you have a link to your Thinkorswim setup? Mr. Darrell, most people just either send me a phone number, I'll give you a call and walk you through it. We had a nice one today with Sheila. I walked Sheila through how to set up her account today. I walk a lot of people through. I actually enjoy doing this. Intel, a dividend stock. Yes, Intel is a dividend stock. Dividends are issued every quarter. Okay, not necessarily so, William, Lou. Some companies pay once a year. Some companies pay twice a year. Some companies pay once per quarter, which is 4 times a year. Some companies pay every single month. Not everybody is watching you the minute you started. Yep, you're absolutely right. Are the options paying 1%. Thank you, Wade. Oh, who's over here? Don Patrick, how are you over there? All right, Intel, 34.58. The 34.50s are going for 60 cents. That's over 1%. That's what I'm looking for. I know who Intel is. I have no problem whatsoever buying Intel and holding on to Intel for a long period of time. But here's my goal. I want to buy it, then I want to sell it, then I want someone to buy it from me, and I want to be in and out within 5 days, and I want to make that 1%. That's more than 1%. That's what I want to make. Lou, interesting. I have to dig a little deeper for the monthly dividend payout companies. All right, well, Lou, here you go. You ready for this? You ready, Lou? Got a pen and paper handy? Dividend Kings List 2024. 54 companies that have increased their dividends for 5 decades or more. Dividend Aristocrats. 64 companies that have increased their dividends for 25 years or more. Dividend Champions. 150 companies that have increased their dividends for 25 years or more. Dividend Contenders. 300 companies that have increased their dividends between 10 years and 24 years, not quite 25. A thought on SPYD, big fat no. Nike, we just looked at Nike a little while ago. Macy's is class, Amazon is garbage. Alrighty then. Let's finish up with Intel. Enough with the questions for a little bit. Here's where it was. Here's the high. Here's the low. Here's where it is. Last 90 days. Look at the direction. What am I looking at? High, low. Where was it? Where is it? What direction is it going? Great. Let's look at the last 30 days. The last 30 days right here. Last 30 days are telling me big fat no to Intel. Look, 30-day bottom here. 30-day top right here. Yep, it's starting to pull back, it's starting to come back down. That's all stocks do. They go up, they go down, they go up, they go down. That's it. Do you pick stocks straight profit without call, and what are fees? Oh, CMG. Let me do that one more time. Do you pick stocks straight profit without call, and what are fees? All right, I'm not 100% sure what you mean by that. I missed a question. Party Springs Entertainment, Starbucks or Pepsi's? I like Starbucks. I actually have Starbucks. But we'll take a look at S-Bucks. And we'll take a look at Pepsi. Pepsi is notorious for not having the greatest premiums. Flipper, just purchased a 1-month subscription. Cool beans. Starbucks, Pepsi, your fees. I don't have fees. I just bought it's your subscription. How do I navigate it? Flipper, your best bet is sending me a DM. I'll give you a buzz. I'll give you a call. We'll talk through it. It might be for you. It might not be for you. Why not? Why no SPYD? Ooh, I love it when people say that. Okay, so Black Peanut. You ready? Now, I said no to SPYD for a reason. SPYD. First and foremost, I like companies that are consistently profitable. 20 years of consistent increased dividends, which means they are profitable for 20 consecutive years. That means every year, year after year after year after year after year after year, they get higher and higher dividends. Worst case scenario, I'm getting higher and higher dividends every year. Second, I want weekly options. Reason being, there's 52 weeks in a year. I like to get a check once a week. This is a monthly. That means I can do it 12 times a year. Now, I don't know where you went to school, but where I went to school, 52 is better than 12. Just saying. Now, another reason. It's over a 30-day high, which means more than likely it's going to have profit taken. But wait, if you order now, I'm going to show you more crap we have on this turd. Hold on a second. What were we looking at? SPYD. All right. Now we'll look at some key statistics. SPYD. We'll look at some key statistics on SPYD, because apparently you didn't like the first 3 reasons why I said no. Summary for SPYD. The yield, 4.56%. You can get a government bond that pays more than that. So why are you taking a risk on a company that's paying you 4.5? Why don't you just go directly to the Federal Reserve and get a 5.5 yield? It only makes sense. But not done yet. Hold on. Historical data. Dividends only. And we're going to the maximum amount of dividends. Oh, look at that. 2015. So from 2015 to 2024, that's 9 years. So when I say I like 20 years of increased dividends, you're giving me this turd that only has 9 years of increased dividend, 9 years of dividends. And we don't even know if they're increasing. Let's take a look. 33 to 28. That's backwards. 33, 33, 59, 32, backwards again. 34, 36, 71, 35, 38. Okay, see, it goes up, it goes down, it goes up, it goes. There's no consistency in the dividends that they're paying out. It's a big fat no, and I just gave you 5 reasons why it's a no. You want to keep going, I can come up with some more. SPYD is not what I'm looking for. I'm looking for safe, predictable, consistent. They have no consistency whatsoever. Sorry, I mean, they're paying dividends, yeah, but they're up, they're down, they're up, they're down. Then they have monthly options, which means I can only get 12 checks a year. I don't know about you, I would prefer 52 checks a year. Okay? I'm showing you how to get a safe, predictable, consistent 1% per week. And you're showing me a company that gets 4.5% per year. Yeah, something just ain't working here. So, usually when I say no, there's usually a reason why I say no. Now, I've been doing it for over 20 years. When you come up with a stock, when I say no, there's usually a good reason. But now that you know why I said no. But if you like it, hey, more power to you. He's asking, do you manage other people's funds? Yes, I do, but I'm very selective of whose funds I manage. And I actually have to meet you in person and actually get to know you for at least 6 months and have an ongoing conversation. Because I'm from old school. I look you in the eyes and shake your hand, and a deal's a deal. What I say is what I mean. Okay? When I'm certain things are beyond my control. Okay? I don't apologize because I don't believe there's a safe space. You know, I grew up in a time where it ain't broke, don't fix it. You know, sticks and stones will break your bones, and names will not hurt you. All right. Touche. Best ones. I have no idea what you're talking about. No on Starbucks. I didn't say anything about Starbucks yet. Party Springs Entertainment. SBUX. Now, I actually have some Starbucks. Because when she dropped from here to here, okay, I want to show you what I was looking at Starbucks. First of all, 72.96 to 73s are going for 76. That's 1% if you like Starbucks. Remember, rule number one, don't ever buy something you're not okay with. I'm not tech savvy. How do I DM you? Ooh, okay. Right up here, okay, right up here where it says Dividend Stock Talk, my little face right there, you click on that. That will show you a couple of things. One, a little tiny envelope, which is an email, which you can send me a message. Another one is the 10-Minute Trader link to my website, to my 10-Minute Trader website. Thoughts on Tesla, Joshua Wallace. Tesla, my thoughts, no. Okay, it would be nice if one of the richest men in the world would actually share some of his profits, but no, he takes all those profits and put them to new cool stuff. Okay, so if you like Tesla and you like what that boy's doing, he's doing some cool stuff, he is. I don't invest in any of his stuff, only because I'm at that point in my life where I want a cash flow on a weekly basis. Okay, so it has to have, oh, we're on Starbucks, right? Party, hold on a second. Number one, the numbers work. 72.96 to 73 is going for 76. That's more than 1%. Simple math, more than 1%. The high, the low, where was it? Where is it? What direction is it going? Cool. Let's look at the last 90 days. The last 90 days. Take a look at this. She was down here. She moved up, pulled back. 3 days to the upside. Here's where I jumped in, right there, at 88. Wasn't I in for a surprise when she dropped? Take a look at this. I was here. Very next day, right there. As she kept going down, I found the bottom and I jumped in right there and I bought some more so I could dollar cost average down. It happens. Okay? They call this a black swan event where she goes from 88 down to 74 overnight. Okay, great. Well, she went up. The gap still hasn't filled. That gap will fill eventually. Whether it takes a week, a year. So far it's taken 1, 2, almost, we're going into month number 3, and the gap still hasn't filled yet. Well, where's the last 30 days? Here we go. Okay, 30-day high, 30-day low, 1 day the upside, 2 days, not quite ready to jump in yet. Because this, it may be the 30-day bottom, it may not, because today was a down day. So I'm going to write down Starbucks for next week so I keep my eye on it, because as soon as she turns, I like 2 days to the upside, too. Okay, here's the 30-day bottom. Friday was up. Great. It would have been really great if today was up, but it wasn't. Okay, so I'm writing Starbucks down, S Bucks. I'm not circling it, but I'm just writing it down. Yeah, here we go. One of Doc's favorites. Hey, Doc, I know you're listening. MPW. Let's take a gander at it. MPW. Here we go. And we're up. Oh, look at that. 475. Oh, that's a nice one. And I actually have some. I actually have some MPWs. I think I have them in like 3 or 4 accounts. I do. Look, if it's a good company, why not? Thoughts on Tesla? Josh, I already said no. All right. Oh, wait a second. 1% a week. Oh, Connor S. 1% a week is the most outrageous number I've heard. Ooh, good thing, Connor. You're not hearing about the 4 and 5% a week that I'm getting. Okay. Connor, if you understand math, let's take a quick gander, right? Walk with me for a second, Connor. This is specifically for Connor S. 1% a week's the most outrageous number I've ever heard. Okay, now, a covered call, buy the stock, sell the option is one of the safest trading strategies there is. First question you have to ask yourself is, do I like MPW? Now, I like MPW. We've been following MPW for the past couple of weeks. Go up, it goes down, it goes up, it goes down, blah, blah, blah. All the kind of nice, neat, fun stuff. So, we're taking a look at how it's moving. Now, last week, the week before, I think I bought it like 4 or 5 times. But here's the thing. Here's where the 1% comes in that you're having a difficult time with. A weekly option is where I buy the stock here at the ask price, okay? Okay, you have the last traded price, $4.75. The bid, what I can sell it for, $4.73. The ask, what I can buy it for, $4.76. The volume, how many shares were traded today, 10,129,000. The open, the high, the low, all those kind of nice, neat, fun stuff. Just below the numbers of the stock is the option chain. Now, MPW has a weekly option, which means it expires every Friday. So, if I buy the stock first thing tomorrow morning at $4.76 per share, if I sell it to someone at $4.50, you get 25 cents. Nah, that's not going to work because the number just doesn't work. But next week, the $4.50 is going for 34 cents a share. Well, that would work. That's 2%, right? Okay, if I'm buying it at $4.76, selling it at $4.50, right? I'm losing 26 cents right off the top. So you take 26 cents off of this. So what's 26 cents minus 34? That's 8 cents a share. That's a little over 1.3 quarters. It's 1 3/4. 1 3/4%. Not the greatest example, but it is over 1%. So that's for a week and a half. So I don't know if that counts. That's weird because it's not giving away 1% today. All right. Well, let's find one that does. Ooh. Oh, wait a minute. Let me finish up because Doc is interested in this one. Okay, so we see where the high is. The high, the low, the direction it's going, where it was a year ago, where it is right now. I want to zoom in a little bit closer. Last 90 days. Here we go. Way over here at 4.6. Jumps up to 6.4. Drops down to 3 something. And look at the 1, 2, 3, 4, 5, 6, 7, 8 days in a row to the upside. Well, that's going to run out of steam pretty soon. So I kind of want to bail on MPW for a short period of time. Because what's going to happen is going to go to a certain point, it's going to turn around and it's going to have profit taking. Well, that's all they do. They go up and they go down. So let's see. Last 30 days. Here we go. Last 30 days. See, that's 30 days ago, 4.8. 4.9 was a 30-day high. Well, you guys can't even see me. 4.9 is the 30-day high. Oh, you can't even see that now. Okay, from there, she drops down. 30-day high, 30-day bottom, and then you have your 9 days to the upside. Yeah, there's going to be profit taking on this one. All right, so sorry, Doc, but there's going to be profit taking on that one. And I think, what's the position on this one? Oh, the 450 puts. Yeah, they're going to expire worthless. That's fine. MPW. 450 puts. Those look like they're going to expire worthless. MPW. Ooh, no. So only MPW in two. Whoops. In 2. All right, fine. Oh, I got 35 questions. So, Connor, I hope that helps you out. Black Peanut. I missed that one. Best one. We did that one. Thoughts on Tesla? Nope. Black Peanut. I appreciate those. Great reasons. I'll have to get out of that. I'm just a Y guy. Oh. Now, Black Peanut, I'm not giving you advice, okay? What I'm saying is that's the reason why I don't buy it. I'm not saying you shouldn't have it. If you like it, fine, buy it. I mean, it's giving you 4 point something percent. Hey, Bob's over here, and so is in Gray Matter. Okay, next couple of questions. Jesse Lopez invited. WMA. We actually have WMA. Starbucks hasn't increased its dividends in the last 3 quarters. Okay, Jim, but do they increase every year? I didn't say every quarter. I said every year. They pay 4 times a year. Let's take a look at Starbucks. SBUX. Okay. 2015. All right, 20, 25, 30, 36, 41, 45, 49, 53, 57. Yeah, they don't even have 20 years of increased dividends. I don't know why I'm buying it. I guess it's the addiction that the American people have with their coffee. It makes me want to get it. All right. Mark, when are you going to start your hedge fund? Very interested. All right, Mark, starting a hedge fund is $65,000 just for the paperwork. Just for the paperwork. Yeah, I'm not ready to throw away 65 grand yet. I have not amassed enough investors that are interested to be able to offset the hedge fund fees. So just, I'm in no great hurry. My children have maybe a decade or so before they're going to be capable of taking over the company. My grandson's only 4, so I'm creating the company for him. He's got what? Another 14 years to go before I hand it over to him. So I'm in no huge hurry for the hedge fund. I have to meet up with a couple insurance companies first, so find out what they're going to guarantee some of the rates at. All right, because I don't know if you ever heard of IULs, where they have an indexed universal life insurance policy where your money actually sits into an index. The S&P, the S&P 500, the Russell 2000, the Dow Jones, whatever index you want. However, they also have something that's called a VUL, a variable universal life insurance policy, which allows you to take the money and put it into any company that you want. So, if I create a company, it's going to take me about 2 to 3 years in order to be able to create enough. What's the word I'm looking for? Historical performance for an insurance company to say, okay, fine, we can guarantee it at this rate. Okay, so I'm looking to get 15 to 18% guarantee for the investors, guaranteed by the insurance company. So that's what I'm looking for. It's going to take me about a year or so, so I'm in no huge hurry. But if you're interested, you might want to send me your phone number, we'll chat, and see what level you're on. Fascinating football videos. How you doing there, buddy? BMY, Bristol Myers Squibb. So Starbucks. What did we say on Starbucks? Oh, wow. I lost where we were. SBUX. I forgot what we were saying about Starbucks. Okay, that's where we were. We didn't finish with Starbucks. Okay, last 30 days for Starbucks right here. Yeah, we did. Okay, here's a 30-day high, 30-day bottom, 1 day to the outside. We're going to keep an eye on this next week so we can find where the bottom is. Because I love a good company coming off of a 30-day high, finding a 30-day bottom, and then turning around, because you make your money in the stock market when you buy low and sell high. Question number 1. Remember my rules, five rules? Never buy something you don't want to own long-term, never sell at a loss. Well, you're going to make your money buying low and selling high. Starbucks, I know who Starbucks is. I have no problem buying them and holding on to them. If the 30-day high was 30 days ago, the 30-day bottom was 3 days ago. Okay, it's not quite the 30-day bottom because it has not been, in my opinion. This is just my opinion. You guys come up with your own opinion, but my opinion, I like 2 days to the upside. 1 day to the upside, then pull back. So now I need another bottom. So we have a bottom here. Now I'm waiting for 2 days to the upside from here. Okay, because we already have a low. Okay, I'm waiting for 2 days to the upside from that point there before I jump back in. Okay, hey, Hollywood, what's happening? It's a REIT. No, Starbucks is not a REIT. Realty income. Oh, hell no to realty income. Okay, Party Springs, you really want me to jump on that bandwagon and give you all the reasons why no to O? Did you like that? No to O? Huh? Bristol Myers Squibb. I like BMY. BMY. Amazon day starts tomorrow. John, more power to you with Amazon. I mean, I hope you make a lot of money with it. It's not for me. It's not a dividend paying stock. There's no way for me to get consistent, predictable income from it. I can get income from it, but I have to sit in front of my computer, look for this setup, look for that setup. Yeah, no thanks. I like safe, predictable, consistent, 1% per week, 10, 15 minutes a day. That's it. I'm good to go. Damone, how are you today? Or damn mood. All right, Damone. All right. Hey, James, what happened to Macy's today? Apparently they walked away from the investors, and then the market maker decided to dump it. Okay, so the market maker did that. That has nothing to do with the company. I mean, the company, I think about it this way, all right? Now, do you think that the stock price went down? Great. Did the owner of the CEO call up and say, hey, Sally, secretary, take the day off, the stock went down? Or, Pete, I know you're in charge of the first floor production level, but the stock's down. Why don't you stay home? It doesn't work that way. People go to work. This crap right here, this is controlled by you and I and the market maker. The market maker takes the news, whatever news he takes, and he decides to open it up higher or lower. And then you and I, the buyers and sellers, we decide to jump on that bandwagon. And hey, if it's going down, the market maker is going to push it down. And as he pushes it down, we're going to follow it down also. And there is going to be a point where we rebel. Because that's what we like to do. We like to rebel. We're going to get to a point and say, wait a second. Wait a second. Starbucks at 72? Hell yeah, I'm going to buy some of that. Same thing happened. Remember a few years ago when British Petroleum had sprung a leak in the Gulf of Mexico? Well, that thing kept tanking and tanking. And every night on the news, the British Petroleum's the leak in the Gulf, they all mess, blah, blah, blah. And they pounded them for months upon months upon months. And the stock just kept dropping and dropping and dropping. And it got to $54 a share. And I said, oh, hell no. British Petroleum was $1 billion, almost $1 trillion company. I'm jumping on that one. No, anyway. Bristol Myers Squibb. Yep, I saw that one. BMY. Simone, what do you think about AUL, United Airlines? Oh, UAL, sorry, UAL. All right, Simone, I'll take a look at it. I'll put it on the list. We'll keep going. Evening, big guy. Hey, Larry, how are you today? Hey, Claire's watching, and Steve, and oh, I can't pronounce that one. Nordendal. Okay. Over there on Facebook, how are you guys doing? I'm going to apologize for the camera quality because I got a new camera and I just can't seem to figure out where my damn password is on Facebook. Okay, that camera over there is already set up. All right. Ooh, 18 more questions. Holy cow. 18. What's the ticker? Starbucks. SBUX. All right. I'm very interested when you're going to start your hedge fund. All right, Mark, just DM me, let me know. Don't advise daily traders what to buy. Don't advise daily traders. Okay, I have no idea what that means. That makes no sense to me. Sweden is one of the Scandinavian countries that consumes most coffee per capita in the world. Well, right then. Darjik. Wait a minute. Drazik, how are you doing? Can I ask, are you active subscriber member averaging 1% per week? Sheila, how are you? You know what, Sheila, you can ask here, because a lot of them, believe it or not, are actually here. You can ask them, ask Wade how he's doing. Ask Hollywood how he's doing. Who else is here? You guys chime in. Anybody on the morning trading group, let the people know how you're averaging, because they want to know. Larry, last night you said you taught your 9-year-old to trade. Is she wealthy now? All right. The interesting thing, Larry, when you're saying wealthy, it depends on how you categorize that. She's healthy. She has a roof over her head, plenty to eat. She has purpose in life. She lost the interest in money right around the time she had the interest in boys when she was like 13 or 14. To be totally honest with you, okay? But yeah, she was averaging 5% per month. But you gotta remember, when she was 9, she wasn't starting out with $50 to $100,000. So the money that she had, hey, Hakuna is here. Woohoo, Hakuna! How's it going? So when she was 9 years old, she didn't have a huge amount to play with. So the numbers weren't life altering to her. Now at this point in my life, I'm 60 years old. Yeah, the numbers are life altering to me. Not my life, but they could be life altering to some people. All right, so I make more now in 1 hour than most people make in a week. Okay, so actually it could be, yeah, about a week, maybe even a month. I don't know. Is it possible to double or triple your money in a year? Well, it is, but not with this strategy. Thoughts on VYM? Black Peanut, I never even heard of VYM. VYM. But I'll take a look at it. How bad do you get hit on taxes since you don't hold? Isaac, that's an interesting question. Here's a thought for you now, Mr. Isaac. Depending on how you have your account, your trading account set up. Now, I have my trading account in a corporation name. Now, a corporation name pays less taxes. Now, if the corporation has losses throughout the year, let's say the corporation buys a brand new car for the corporate officers. Let's say the corporation has a corporate retreat on a monthly or quarterly basis. Let's say this quarter we go to Tahiti, next quarter we go to Aruba, next quarter we go to Canada, and the following quarter we're in Mexico. So if the corporation is consistently losing money and the trading is consistently making money, they have a tendency to wash each other out, and I haven't paid taxes in over decades. Sorry. There's a reason why rich people don't pay taxes. Okay, you take that book, that 10,000 page code book that the IRS has, it tells you specifically how to not have to pay taxes. It's not an instruction like do this, do this, do this. No. You get an audit, say, great, wonderful. Tell me how to do it the right way. How bad do you get hit in taxes? Yeah, so I don't do taxes, and it all depends on how you have your account set up. And this is the only advice I actually give out. Okay, my advice to anyone interested in doing anything like that is talk to a no, not a CPA, not a CPA, a tax strategist or a tax planner. Okay, sorry, CPAs they don't know all the rules. Tax strategists do. Tax planners do. Okay, Dina Linden, how are you? Why no to O? Oh my goodness. So I take it you're, I'm trying to figure out, you got that, Ed? I'm trying to figure out what age group you would be in. Because I'm a Gen Xer, my mother would always say, no, because I said so. And that was it. So I'm saying no because I said so, but if you really want to know, no to O, one reason, it's a monthly. Okay, now, DJ, monthly means there's 12 months in a year. It means I get a check once a month doing a covered call. Safest strategy there is. Weekly optional stocks gives me 52 checks a year. So ask yourself this very simple question before we go any further, because I have a lot more reasons why I say no to O. Would you prefer 12 checks a year, or would you prefer 52 checks per year? And we can leave it as simple as that, unless you really want me to dig deeper and give you more reasons why I say no to O. But no. What do you need hold-wise to hit $5,000 a month in dividend payouts? Ooh, that's a good one. The easiest way to figure that one out is how many weeks. Ooh, all right, here we go. We'll open up a calendar. No, it's not a calculator. Make the calculator a little on the bigger side. Whoops, that's a little too big. All right, right there. Clear that. All right, you ready? This is for Isaac. You ready, Isaac? $5,000 a month. Okay, clear. $5,000 a month multiplied by 12 months equals $60,000 a year. Okay. Then we're going to divide that by 52 because there's 52 weeks in a year. Okay? $1,153 a week. Okay. Multiply that by 100. You're going to need $115,000, $115,384 to make $5,000 a week at 1% per week. Okay, but better than that, Isaac, let me show you what I got for you. Check this out. You're going to love this. Okay, on my website, The 10-Minute Trader, we're going to go to the little hamburger up in the upper corner. We're going to go to the weekly compound interest calculator. Okay, weekly compound interest calculator. And what we do here is one of the very few calculators. I actually had to create this myself because nobody had anything even close to it. Now, over here, you take what your initial deposit's going to be. All right, your initial deposit. Let's say hypothetically you have 10,000 bucks. All right, to start. Oh, you want to do better than that? Let's start with 5,000 bucks. 5,000 bucks. Now, second line, periodic deposit. Well, let's say I put in $100 a week. Okay, hopefully $100 a week is not going to break you. If not, let's cut it to 50 bucks a week. 50 bucks a week. Now, I'm showing you 1% per week strategy here. So we're going to change this interest rate to 1%. Now, the $50, we're going to do that weekly, okay? Next line is deposit frequency, weekly. All right, weekly. You can do it monthly, you can do it bi-weekly. Now, let's take a look at time frame. How many years do you want to do this? Well, let's do 10 years just for the fun of it. 10 years. Now, starting out with $5,000, $50 a week at 1% per week for 10 years. Be better if it was at 0. 10 years. Here we go. Okay? At the end of 10 years, that's $1.7 million. Okay? $5,000, $50 a week, 1% per week over 10 years, 1.7 million. Now, what is the goal you needed? The goal you needed was 115,000. Okay, so let's go 5 years. That's 1.2 million. Let's go 3 years. 3 years. All right, 3 years is 42,000. That's not going to do it. 6 years. Nope, it's too much. 5 years. There you go. Start out with 5,000 bucks, $50 a week, 1% per week. For 5 years, I'll give you $127,000. Okay, $127,000, 1% per week. That's $1,200 a week. Okay, hopefully that works for you. I like that calculator. I had to make it myself because nobody else had anything like it. Dimone, 10% down. I have no idea what that means. Party Springs, why no to O? We just went over why no to O. Party Springs. AJ Cola, all right. Hello. Uh-oh, I missed a bunch. There's no weekly dividend stocks. Nobody ever said there was a weekly dividend stock. How do you get the morning show? Ooh, Alexander, you get there by going to the website, The 10-Minute Trader. Go to the home page. Look at that right there. Live trading online. If you don't like that, you can always come down here. So, live trading, join our morning trading group. You click on that and it takes you right over to the Patreon, which is where it is. All right, back to where we were. Whoops, wrong one. Wrong one. That one right there. Okay, so O's a no. Always has been, always will be. I don't like the numbers. All right, but Party Springs Entertainment. I never ever said there was a weekly dividend paying stock. I said dividend investing for weekly cash flow. Hakuna, What'd you say? During the dot-com bubble, for a short time, I made more money per day than most people make in 6 months. But then the bubble burst, and everything was gone. Yep, I remember that. I wasn't part of it. I lost $91,000 in 1 week. It is what it is. It's all part of the game. So, Party Springs Entertainment, you're absolutely correct. There are no weekly options, no weekly dividend stocks. Okay, now I said dividend investing for weekly cash flow. So the companies I like are dividend companies that have weekly options. Weekly options are weekly. Dividend stock paying weekly. I didn't say paying dividends weekly. I said dividend stocks paying weekly. It's a play on words. You're still getting 1% per week. Painful day for Macy's today. Well, not really. Think about it, Tucker. All right, hold on a second. I want to show you guys something I haven't done in a while. Hey, James, you're late. All right. Gap, please. GPS. GPS. All right, so let's go to Macy's for a second. All right. Now, we all seen Macy's. We all seen what happened today. Right? 1950 yesterday. Today she's at 1680. Great. Look at the blue line behind it. Look at that. Now, I want to show you something a little on the interesting side that a lot of people don't have a tendency to think all the way through. Now, the bid, 1693. The ask, 1696. Now, you can get a second grader, third grader, and tell them what's the difference between 1693 and 1696. Well, it's only 3 cents. 3 cents. All right, I want you to remember that, 3 cents. Let's go to charts. Let's get rid of this. Let's go to the last couple of weeks. Now, see all these little dot lines down here, these blue lines? That represents the average volume. So let's take our cursor, put it right there, right on top. See that? Average daily trading volume, 4.5 million. Look, it almost hits every single one, except for this one and that one. Now, we're going to isolate those in a second. I just want you to do with the average. Just go with the average. 4.58 million. Okay, so let's get out the calculator. Now, remember we said the spread between the bid and the ask is 3 cents. Okay, 0.03 cents. Now, what is the average trading volume? 4.58 million. Okay, we're going to multiply that by 4.58 million. Okay, 4.58 million. So, on a daily basis, average, the market maker makes $137,000 a day. Market makes $137,000 a day. Okay? The average volume. The average volume. Now, what did he do today? $23.3 million. Okay, let's take the same 3 cents, multiply it by 23.3 million. Okay, so market maker makes over $100,000 a day, but today he makes almost $700,000 a day. Why? Why do you think that is? Do you think that the value of the company went from 19 to 16? No, there's only one person who's in control of the opening price of the day. Who is that? That's the market maker. Now, if the market maker, seeing normal stuff, see the gap up right here? The market maker did that. See that big 17.2 million shares? Okay, so he averages 127,000 a day. Average, 127,000 a day. But this day here, my son needs a new Porsche. Okay, great. Let's bump it up. Get some more volume. Great. Now he gets a couple million extra bucks. A couple extra 100,000. Today, well, he woke up in a bad mood. His wife was being mean to him or something. So I'm dropping his stock, getting a whole bunch more. Whatever the market maker doesn't have anything really to do with the company. It's just news. Big deal. The people walked away from the buyout. So what? This is the second buyout they had this year. They're probably going to have another buyout coming up soon. And probably the exact same thing's going to happen. Did anything happen to the company itself? No. The investors walked away from the table. Big freaking deal. They're still doing the exact same thing. Macy's. Sally, the secretary's answering the phone. Pete, the plumber, and Joe, the maintenance guy, they're still in there doing their jobs. They didn't decrease their production this much. No. They do their business. They go to work. They do their 40 hours a week. They do it day after day after day. This crap here means absolutely nothing. That's just the public's opinion. How come you lost $91,000 in a week? Because I was stupid. I thought I was smarter than I actually was. Never, ever, ever, ever put all your eggs in one basket. That's what I did. Very expensive lesson. Okay, there was a company, RNWK. Never forget that one. Real Networks, the first one to come out with online video. Don't remember if you guys know that. First ones to come out with online video. The stocks went, I don't know, it jumped 45 points in a couple of days with no news. Scouring the news, no news anywhere. Why would the company jump $45 in one day, in a couple of days? Well, great. I thought there was profit taking. Next day, boy, was I wrong. It jumped another, I think it was like another 60 points after that. I got a phone call from the broker. Mr. Gardino, excuse me, you're done. That's it, Mr. Gardino, you're done. That's what the conversation was. Not hi, hello, how you doing? Mr. Gardino, yep, you're done. That's it. We're gonna liquidate all your positions to cover your losses. That's the phone call I got. I've never heard of anybody getting that phone call other than me. Okay, the great Dradini, weekly dividend? No. Who said anything about a weekly dividend? Jimmy, hi, I'm late today. Well, hey, you're here. That's all that matters, showing up. Thanks for the explanation. Okay. Hey, it happens. You know, you see a position like this one right here, this Macy's. I see this big, huge drop. That's an opportunity. Okay, you're going to make your money when you buy low and you sell high. But never buy a company you do not want to hold long term. I have no problem whatsoever buying a Macy's and holding it long term. Macy's has been my biggest winner this year. Okay, we're in week 29. So what are you doing is day trading? Not really. I buy on Monday, I sell on Friday. That's not day trading because Tuesday, Wednesday, Thursday, Friday. I mean, Tuesday, Wednesday, Thursday, I don't do anything. Day trading is every day. Jimmy, we are going to look at the gap. We're going to get there. So as I was saying, when you see an opportunity, okay, some people will jump ship and say, oh, I'm getting out. They're panicking. The company's over 100 years old. I really don't think they're going anywhere. I mean, Macy's New Year's Day parade, Easter parade, Thanksgiving parade. Do they have a Valentine's Day parade? I don't know. Thanksgiving parade, New Year's Day parade, Christmas parade. The name Macy's, everybody knows who they are. The name recognition alone is worth more than $16 per share. Just my opinion. This is all just my opinion. I don't give any advice to anyone. Please check what I say. Do your own research. All right, next on the list, Hormel. HRL, a company that's over 100 years old. HRL. 30.89, 31, 5 cents. Oh, no. Ooh, 26 questions. You guys keep hitting me with these questions. Weekly dividend. All right. All right, Party Springs Entertainment. Why you keep going on about weekly dividends? Nobody has weekly dividend. Not that I know of. What are the weekly dividend tickers? I'm interested in adding them to my portfolio. All right, the great Dradini. I have no idea where you got the idea of weekly dividends. I don't. Okay, the name of the channel is Dividend Investing for Weekly Cash Flow. Dividend stocks, I buy dividend stocks. I use weekly options to get weekly cash flow from dividend stocks. Dividend investing for weekly cash flow. I didn't say anything about weekly dividends. Is that trading? Yes, that's trading. Your screen is too bright. It's hard to see the screen. James, my coin, Tesla, and BTX hit over 80% today. Awesome for you! I listened and bought the shares on Thursday and sold a covered call immediately on the same day. Awesome. What are you using to calculate that? What am I using? I'm using a calculator. Also, Abbott Labs, please. Yeah, ABT. We'll write that one down. Isn't Abbott Labs on the list already? All right, ABT. It's on the list now. ABT. All right, Jimmy, we'll get to it. I'm still going to sell puts. Awesome. MPW. We looked at MPW a little while ago. All right. All right, Simba, we already looked at MPW. Gavin Young, that's insane. It can't be done. Only one hedge fund in history has been able to do that. All right, Gavin Young, I'm not 100% sure what you're talking about. All right, Gavin Young, dividend stock talk. 1% per week is insane and unachievable. That's 52% per year. Actually, Gavin, your math is incorrect. 1% per week compounded is 62% per year. Now, while I got you here, Mr. Gavin, let me just go here, and then I go here, and then I slide to here, and then I go to here. Okay, what I'm doing is I'm going to my website where all my trades are for the year. Okay, so the beginning of 2024 was January 2nd. January 2nd, 2024. CVS, General Motors, Southwest Airlines, Comcast, Ford. Buy the stock at $79.49, sell it for $79, got $1.02 per share. Buy the stock at $36.27, sell it $36.50 for 37 cents a share. Buy at $28.96, sell it $29, get $39. Buy at $43.85, sell it $44, get $32. Buy at $12.31, sell it $12.50, get $8. What did I make that week? I made a grand total of 2.38%. That's not 1%. Oh, look at the next week. Okay, here we go to the next week. Lowe's, Comcast, Ford, General Motors. Again, here are the numbers. Here's the timestamp, right here, timestamp. Covered call, single. What I bought, what I sold, blah, 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 blah. What did I make week number 2? 2.5%. So you're right, 1% a week is not achievable. Oh, wait, here we go. This one might be a little better for you. General Motors, Comcast, Wells Fargo, Morgan Stanley, Ford. Okay? Timestamps, what kind of a trade it was, the buy, sell, the quantity, the prices, all that kind of nice, neat stuff, fun stuff. Week number 3, what was week number 3? 1.43%. Week number 4, 2.9. Week number 5, 2.09. Week number 6, 3.02. Week number 7, 3.7. Week number 8, 2.05. Shall I continue, or do you want to do the math yourself? Okay? Account number 1. There's 2 accounts here. Account number 1 started off with $117,475. It is up 30.9%. We are in week number 29. I haven't calculated the last 4 weeks, so it's probably on 34, 35, somewhere in that area. Account number 2, okay, 100,000 margin, 100,000 cash. That's 200,000 altogether. It is borrowed money. I do not suggest people do this. Year to date, 69.5. Again, I haven't calculated the last 5 weeks yet, so it's probably over 70% so far this year. You don't believe me? You can check the numbers yourself. I would say you're an expert compared to my knowledge on it. Oh, all right, thanks, Ed. But I'm not an expert at anything. But Gavin, if you want to check it, there's all the numbers there. Okay? What else we have? Pictures. Hold that thought. Stock market. Here we go. Trades 2021. Oh, look at it. Week 1, week 2, week 3, blah, 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 blah. All those. August. What are we looking at? Year-to-date profit and loss, $35,000 on a $100,000 account. That's 35% in the month of August. September, October, November, December. Okay, that's 4 months short of the year. That's pretty good. April 22nd, that's 4 months in. Week 12, something like that. 8.2% in April. That's not bad on a $100,000 account. So don't get me wrong. I always get naysayers all the time. If you can't do your simple math, I can't help you out. Okay, let's take a look at Macy's just to give you a quick little idea. $16.96. The closest strike price is going to be the 17. The 17 is at 35 cents per share. Let's do some quick math with that. 35 cents per share. Let's clear this. 30.35, and we're dividing it by the purchase price of $16.96. 16.96 comes to a grand total of 2.06% for the week. Okay, 2.6%, 2.06% for the week. That's not 1%. So, Gavin Young, okay, if you don't understand the math, try to figure it out. It's really not that difficult. 1% of a $17 stock is 17 cents. 35 cents is more than 2%. Great. So the question is, do I like Macy's? Well, of course I like Macy's. Macy's has been my biggest winner this year. That's insane. It can't be done. Only one hedge fund has done that. Yeah, well, I don't have a hedge fund yet. But I'm working on the process. Now, I've been doing this exact same strategy for over 15 years. Thoughts on selling covered calls. That's exactly what we're doing. Happy project. VOO is going to be a no. Sorry about that. DJ, what about ENPH? That's going to be a no also. The wheel strategy is the best. Exposing viewers, you're absolutely 100% correct. However, I don't do that here. What I do here is simple, predictable, consistent, and safe. Remember, this was created for a 9-year-old little girl. It had to be simple. Safe, predictable, consistent, and no way that she could lose. So it came up with the 5 rules. Never buy something you don't want to hold long term. Make sure you never settle at a loss. 20 years of increased dividends, weekly options, and then double check the numbers. Yeah, but I bet you're not good as Nancy Pelosi is. She cheats. That's not fair, Ed. Ed, you threw me off. You did. What was I saying? I forget where I was. What Ed, all right, sorry, for you guys over here on TikTok, Facebook, and Instagram, Ed over here on YouTube says, yeah, but I bet you're not as good as Nancy Pelosi. She freaking cheats. It's not fair. You can't compare an honest man with someone who cheats. Thanks, man. Super interesting stuff. Interested in learning more? Check out the pages. Hey, Isaac, keep coming back. Ask yourself a question. When you're ready to step up and join, hey, join. If you don't want to join, don't join. Take with the information. Take what it is. Buy a good, solid company. Never sell at a loss. Make sure it has 20 years of increased dividends. Make sure it has weekly options, and then gain a weekly cash flow from it. It's not just Macy's, INTC, Intel. Okay, 34.58. Well, the 34.58s and 34.50s are going for 60 cents. Okay, I'm losing 8 cents right at the top. Take 8 cents out of this. Well, I'm walking away with 52 cents. All right, so what's 52? Clear. 52 cents divided by the purchase price, 34.50. 34.50. Now, before you say it's 34.58, I already took the 8 cents out of the equation. Okay, 34.58. Okay, 34.50. I'm collecting 60 cents. I'm losing 8 cents. I'm taking 8 cents right out of the 60. It's leaving me with 52. So, what am I walking away with? I'm walking away with 1.5. That's 1.5% for 1 week. But here's the question. Do I like Intel? Do I like Intel at 34.58? Remember, rule number 1, never buy something you don't want to hold long term. Well, what's the chart telling me? Well, here we go. Here's the high of the year, way up here at 51. Here's the low, down here at 30. Well, where are we now? We're here at 34.5. Question on Instagram. When you choose a company, when do you prefer that the dividend is in relationship to the expiration date? Before or after? That's a good question, Akuna. I always take a look at the calendar first. The calendar. All these little green dots represents EX dates. There's 4 dates to remember when you're investing in dividend stocks. 4 dates to remember with dividend stocks. Number 1 is the announcement date. That's self-explanatory. It's when the company announces when they're paying, what they're paying, blah, blah, blah. Number 2, the EX dividend date. The EX dividend date is the last day the stock trades before the dividend is paid out. Date number 3, the date of record. Whoever owns the stock on the date of record is entitled to the dividend. Date number 4, self-explanatory, the payment date when you're getting your money. But to keep it simple, can you just buy the shares and place a covered call? Well, exposing first, that's exactly what we do. Let me show you one. Let's pick up Oracle. Oracle. ORCL. Okay, Oracle's going to be a no. Okay, it's at a 30-day high. Yeah, no, sorry. Let's find one that's good. How about Baxter? BX. Baxter's been in business for over 100 years. BX. That's a no also. Look, it's at a 30-day high. See it? 30-day high. No thanks. How about just X? US Steel. Ooh. Yeah, not a 30-day high. What? It's got a lot of 30-day highs. Want to be interesting. Pfizer. PFE. Another 30-day high. Ooh, Citigroup. Not at a 30-day high, but in a downtrend. See 30-day high here? She's coming back down. Here's your bottom here. She was up, and she comes back down again. Yeah, no, sorry. VLO, Valero. Let's take a look at Valero. VLO. Ooh, nice. Here's a good setup. You ready for this? Valero. All right, let's go back. Take a look at all the whole year first. Okay, 149.75. The closer one's going to be the 150. 142 by 150. You might get your 1% out of that. You might have to do a limit order. Okay, 142 by 157, somewhere in the middle. Okay, you want to get $1.50. Okay, $1.50 is going to be 1% of a $149 stock. Okay, great. What's the chart telling me? The chart's telling me here's the high, here's the low, here's where it was, here's where it is. It's not at the high and it's not at the low. See, the low's here, low for the year's to here, the high for the year's here. We're smack dab in the middle. Great, awesome. Let's go to the 90-day. Okay, the 1 year chart looks fine. The 90-day chart, here we go. Last 90 days. 5 things I'm looking for. High, low, where was it, where is it, what direction is it going? Now I'm on the 90-day list. I want to take a look at one more thing. Look. Up, down, but look at the movement. It goes about 2 weeks, drops, 2 weeks, jumps, a week and a half, drops, 2 weeks, drops, 3 weeks up, 2 weeks drop. So we're down here. Here's the new 30-day bottom here, 2 days to the upside. I love that. Let's take a quick gander at it. All right, 30 days ago, here we are, 150.58, 30 days ago. Our 30-day top, right here. Okay, the high is 162.06 on the second. Okay, the new 30-day bottom right here, the 11th, 3 days ago. That was last Thursday, right there. The low is 134.54, 2 days to the upside. Great opportunity to jump in. It's like a red carpet. Come and grab me. Before we do, let's take a look at seasonality. What does this company normally do this time of year? Normally this time of year, she's in a little bit of an uptrend. Oh, let's go back because some of you guys might not know this. All right, this chart right here we're looking at, this is what's called a seasonality chart. The blue line, well, before I do that, all the way over to the left is January 1st. All the way over here to the right, December 31st. Okay, so the blue line right here represents the movement for this year so far. The red line represents the movement for the past 10 years on average. So where do I want to see? Right here is today. That little blue dot right there, that's today. So I want to come down here and see where the movement, where are we in the middle of July? See, July, August, this is where I want to see right here. So I want to zoom into that, put my cursor on the little blue dot, click, drag right, there we go, and bring it down, line up the crosshairs. Check it out. It's going to the upside, right there. I like that. That's perfect for covered calls and spreads. No big movements whatsoever. But check it out. 30-day high, 30-day low. She's bouncing off to the upside. Stocks go up, stocks go down. That's all they do. If you can catch it, a 30-day top to a 30-day bottom, she's bouncing and turning around. Yeah, awesome place to be. But to keep it simple, you just buy the shares and place a covered call immediately. Yeah. Okay, exposing first. Let's take, you like to do buy right, like selling puts first. Okay, fine. I don't do this puts first. Let's take a look at how I would actually do this trade. First, now remember, I like it just where it is, the 149.75, which means the 150s. I like the 150s, so let's take a look. Get that out of there. First thing I want to do is I want to change this right here where it says single. I'm going to change that to covered stock. Okay, and I like the 150s. Here's the 150s right here. Okay, I want to come over to the call and I want to buy right there, the ask. That's the buy. I'm buying. See the little thing? It lights up and says buy. If I go over a little bit, it says sell. I don't want to sell. I want to buy, and I want to buy it at 150. All right, click there. Automatically fills. Here's my order. I have it preset to do 1,000 shares. So 1,000 shares. If I buy 2 orders, I'm buying the stock and I'm selling the call. So you come over to the order. It says spreads covered. It's covered stock. I'm actually doing 2 trades at once. I'm buying 1,000 shares and I'm selling 10 contracts. If that's too much for you, let's change it to 300 shares. So I'll buy 300 shares, I sell 3 contracts. Okay, the symbol is VLO, which is Valero. Okay, the date, 19 July 24. That's this coming Friday. Right? I like weekly options. I like getting a check every single week. Now the thing is, if I buy this first thing tomorrow morning and I sell the covered call, I get that money right away. Okay? It goes right into my trading account, which is attached to a credit card and attached to a debit card. So I do that. I hear you, but I still don't say when you, but still didn't say when you want the dividend to be in relationship to the expiration date. Yeah, I did. I want to buy 2 weeks before the EX dividend date. Debbie Cooper, how are you? Ooh, Esteban, how are you guys? I'm going to apologize over on Facebook because of the camera quality. I have another camera and I just can't seem to get it online with Facebook. It's just been very difficult. So let's finish up with you, Fioros. This is everything right here. Those are 2 orders. I'm buying one, I'm selling the other, and I like to do in market order when I'm entering. Why? Well, because the stock and the option are tied together in a covered call. So I'm doing it all at once. So my profit is already in there. So when I go to confirm, all right, this is what the order looks like. I'm going to read it out loud so you can actually hear it. I'm going to get my calculator so you see what the numbers look like. Whoops. All right, way over there. All right. First, I always tell all my students to say it out loud. Read it out loud so you understand what you're hearing, what you're seeing, so you don't make mistakes. Buy 3 covered VLO. That's Valero Energy. 100s, those are the weeklies. 19 July 24, that's this coming Friday. The 150 call and the VLO. So I'm buying the stock, I'm selling the option. At the market price to open to open. To open to open means I'm opening a stock order and I'm opening an option order. It's 2 orders in 1 trade. Now, my break even is 47.25. Right now it's at 149.75. So I'm already profitable. As long as the stock stays above 147.25, I have a profit. My maximum profit for this trade is $823.50. So we're going to put that number over here in the calculator. $823. I'm not going to deal with the change. Okay, what is it costing me? Well, it's costing me $44,178. $44,178. So what is my rate of return for the week? 1.8%. Okay? 1.86% as a matter of fact. Gotta change battery. Hold on a second. I have to have the fans blowing on the camera so they overheat and turn off. That's funny. All right, so there you go. I actually did one for you right there. And it's only 300 shares. I like buying 1,000 shares at a time because I just like it better that way. 1.86% for the week. But the biggest question you need to ask yourself, there's a couple of questions you need to ask yourself. Question number one, do I like Valero at 149? That's question number one. Question number two, does it make sense? Because you only make money in the stock market when you buy low and you sell high. Well, here you go right here. The high is here, 30-day high. Now, I don't know about you, but I live my life one day at a time. But in the stock market, I can do it 1 week at a time. All right, so today's Monday, it's here. I can jump in tomorrow at the 149, at the 150, get the 152, 142, which is almost 1%. That's what I like. All right, I got 21 questions, and we're at 11 o'clock. We're gonna go to 11:30, so you guys just hang tight. Dun, 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 dun. Ooh, tight spread on Macy's, very liquid. I like it. Yep, I already bought me some Macy's today. Smart, thank you. James, you said buy 2 weeks before the dividend, but I'm not asking about that. I am asking when you want the dividend payout to be in relationship to the option expiration date before or after. Oh. Well, the payout is always after. But I really don't pay, all right, Hakuna, I honestly don't pay attention to the dividends. The only reason I pay attention to the dividends is it tells me when to buy the stock. Okay, so I have I have 300 companies that I look at, and I put them into the calendar. Okay, so there's 90 days in every quarter, but there's only 66 trading days. So if you take 300 stocks and put them into 66 trading days, or 13 weeks, because it's 13 weeks in a quarter, and we're trading weekly. We buy on Monday, we sell on Friday. That's 13 weeks. So you got 300 stocks in 13 weeks. That means I'm looking at 10 to 15 stocks every single week. That's it. And then it rotates again. Okay, so the first quarter of January looked the exact same as the first quarter of the of April, which looks the exact same as the first quarter, the first couple of weeks of July, which is going to look the exact same as the first couple of weeks of October, because there's 4 quarters: 1, 2, 3, 4. January, February, March, quarter 1. April, May, June, quarter 2. July, August, September, quarter 3. October, November, December, quarter 4. All have 13 weeks. Week 1 to week 13. Week 1 to week 13. Week 1 to week 13. Over and over and over. I've been doing the exact same thing for 15 years now. I've been trading for over 20. But since I created this strategy, it's like, why do anything else? Because I value my time. In 10 to 15 minutes a day, I make my 1%. Thank you very much. And I move on. I try not to complicate things. I lose on Macy's on 100 shares. Dimone, how did you do that? For how long you keep Macy's share? I keep them until it hits my target. Do I like O? Julian, no, I don't. Do you like the ticker O? Don't like that one either. Question on Instagram. Yep, we already looked at that. Do you ever use margin? All the time. Now, Daryl, I have 2 accounts that I share publicly. One is a margin account, one is all cash. Just to give you an idea of what does the cash account look like, what does a margin account look like. Now, for me, the margin account is twice as much, is twice as much a return as a cash account. So it doesn't matter for you if the dividend pays out 1 day before or 1 day after the expiration date. Is that correct? All right, Hakuna, you're getting it all wrong. There's 4 dates to remember. Okay, there's only 4 dates when it comes to a dividend. Number one is the, I'll give you an example. Let's pull up Caterpillar. Okay, just going to pull up Caterpillar as an example. 4 dates to remember. Date number one, the announcement date. They announced the dividend on the 14th. Wait a minute, that's 2000. I'm going to go to 2024. Here we go. All right, we'll use Lowe's. Where's Caterpillar? Oh, there's Caterpillar. Nah, all right. We use Lowe's. All right, we're going to use Lowe's this time. Here's Lowe's right here. July 2024, the 24th. Lowe's. The dividend at $1.15. 4 dates. Date number one, 5/31/24. That's the announcement date. That's when they announced the dividend. Date number two, the EX date, July 24th, 2024. The date of record, July 24th, 2024. The payment date, August 7th, 2024. So only 4 dates. Now, last year, the EX date and the date of record were different. So let's go back 1 year. Okay, Caterpillar, the announcement date 6/14, the EX date 7/19, date of record 7/20, payment date 8/18. They changed it this year so that the EX date and the date of record are the same days. Hollywood, this is what we do. Yep. Oops. Oops, this is what we do. Mr. Darrell, yes, he has a margin account. Look on his website. Thanks, Recon. Sheila, did I miss VLO? Sheila, you did. We just did VLO. Trying to learn if you were starting new in trading, investing today, where would you start? Bible beat. Ooh, we have that conversation, dude. He who hath shall more be given. He who hath not, even what he hath, shall be taken away. Ooh, I like that one. Keep coming back every night until you get the concept. Okay, it's very simple. Never buy something you don't want to hold long term. Never sell at a loss. Make sure the company has 20 years of increased dividends. Weekly options are a must. And then make sure the numbers work. Well, what do I mean by the numbers? VLO, $149.75. That is the current price that I can buy it for. Okay, this is called the trade grid. You can get this anywhere. You can get it on Google. You can get it on Yahoo Finance. You can get it on MSNBC. You can get it on Motley. You can get it on Fidelity. You can get it on Charles Schwab. You can get it anywhere. These numbers are universal. You go anywhere in the world and you say, hey, what was Valero Energy at the last trade on the 15th of July 2024? No matter where you go, you always see that number. That's the last trade for today. The bid, the ask, the high, the low, the open, the close, the volume, blah, 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 all that stuff. Make sure the numbers work. What am I buying it for? I'm going to do a covered call. A covered call is one of the safest strategies there are. You buy the stock, you're selling the rights for someone else to buy it from you. Think of it this way. If you got an old car sitting in your yard for a sale sign on it, Tommy down the street comes by and says, hey, I'll give you $100 if you hold it to me till Friday. Great, you hold it to him till Friday. Friday comes, he shows up, he buys the car. If he doesn't show up, you keep the $100 and then you sell it again on Monday. So you can say that you buy the option 2 weeks before the dividend payout. No, before the EX date. And you don't care if the payout is before or after the expiration date. Is that correct? Nope, that's not correct. Hakuna, you're making this a lot more difficult than it needs to be. Each one of these green dots represents a company. Okay? Caterpillar, the 19th. The announcement date is the 14th. The EX date is the 19th. Date of record is the 20th. The payment date is the 18th of the following month. Okay? I like to buy 2 weeks prior to on a Monday. the 3rd. Dividends the 19th, 2 weeks on a Monday, the 3rd. Okay, I buy the stock at the money if the chart is right and the numbers work. If I'm out by Friday, great. I'll see Caterpillar again in 90 days because it pays a dividend every 90 days. I will not look at Caterpillar again for the whole quarter until it comes back around again. It's like a revolving door. You stand there long enough. Oh, merry-go-round, even better. See the red horse with the hat on? Yeah, it goes around and oh, there it is again. It goes around and oh, there it is again. It goes around, oh, there. Caterpillar every 90 days. There it is. Okay? July is the first week of the 3rd quarter. So we have Capital One Finance. Wait a minute, no. That's Comcast, The Gap, Cisco, JP Morgan, American Express, Bristol Myers Squibb, MasterCard, NTAP, Cisco, AT&T, Verizon. First week of the quarter. Let's go back to April. First week of the 2nd quarter. Oh, look, Comcast, Cisco. Yeah, Cisco, Gap, American Express, JP Morgan, MasterCard, Cisco, Bristol Myers Squibb, AT&T, Verizon. Same thing. Oh, wait a second. Hold on. Let's go back to January. First quarter. Comcast, Gap, Cisco, American Express, Bristol Myers Squibb, JP Morgan, NTAP, Cisco, MasterCard. Same thing. Quarter after quarter after quarter after quarter. It keeps paying the same companies over and over and over again. 2 weeks prior to what date? The EX dividend date. Hakuna, you ready? 4 dates. Announcement date. EX date. Date of record. Payment date. Okay? The only one that's important is the EX date. Okay? That's what the little green dots are. Those are the EX dates. See? Lowe's. Let's click on Lowe's. Okay, Lowe's, the 24th. EX dividend date, the 24th. Date of record, the 25th. Payment date, the 8th of the following month. 4 dates. Are they all covered calls? Yes, they are all covered calls. Do you compound your premiums? I thought you collect weekly income. User 5466, I do. I don't compound anything. See this right here? Week number 10 and week number 11. Okay? I made 0.9. I didn't make my 1% that week. But look, withdrawal, 1,500. 3.9% withdrawal, 1,900. This week, 4.6, didn't take anything out. This week, 2.32% withdrawal, 1,700. Withdrawal, 1,700. Withdrawal, 1,900. Withdrawal, 1,900. Yeah, I've taken out over $25,000 so far this year out of this one account. Okay, 1,200. Yeah. Anyway, is what it is. Let's go back. Back to it. Ooh, the day is winding down. What happens to the share when you sell the calls? They just hang out and wait. Think of it as layaway. Think of it as layaway. You go to the store, say, hey, I like this. Here, take a couple bucks, hold it for me for a while. Same thing. What is the best major in college, in your opinion? College is a waste of time, in my humble opinion, unless you need it specifically for your field and endeavor. Lawyer, accountant, doctor, police officer, something you're going to use. Most people don't use what they learn. When you do margin, is that related to covered calls or something else? All right, a margin, okay, your residence. A margin account is where I put up $100,000 and they put up $100,000. They is the broker. So I'm borrowing money from my broker. So if I put in $100, he's going to put in $100. If I put in $1,000, he's going to put in $1,000. But here's the thing: the market, the the margin is being borrowed from the broker. Now, each broker has their own rules when it comes to margin. I borrow margin money at 8%, so I'm paying 8% per year to my broker just for me borrowing their money, which I have no problem with that whatsoever because I'm making over 50% on that borrowed money. So if I'm borrowing at 8% and I'm making 50, it means I'm walking away with $42,000, 42% of someone else's money. That works for me. All right. How would one bail out of Macy's if they sold a covered call last Friday? Alrighty. Here we are at Macy's. The last 30 days from Macy's is right here. All right, so here's the last 30 days from Macy's. So you're saying you sold a covered call here, okay, which means you collected a premium for this week. Well, the stock's down here now. More than likely, that covered call that you sold is going to expire worthless, and you're going to keep holding on to your Macy's. Okay, so if you sold it on Friday, okay, because it was between 19 and 19.50 all last week. So more than likely, you sold the 19s or the 1950s or the 20s, one of those in that area. Hypothetically speaking, because I really don't know, because you didn't say so. But if you sold the covered call last week, it's more than likely going to expire. Leo Bookman, on your weekly results table, what does the red and green blocks represent? Wow, you got to be really new for that question. These are the trading days, and this is called a candle pattern. There are 4 items you're looking for on a candle pattern. 1 is the top wick. 2 is the bottom wick. 3 is the top horizontal line. 4 is the bottom horizontal line. Now, on a green, okay, green, the top of the wick is the high of the day. The bottom of the wick is the low of the day. On a green day, the bottom horizontal line is the opening price of the day. On the top horizontal line is the closing price of the day. Now let's take a look at a red one. A red one is a down day. Same thing. Top of the wick is the high of the day. Bottom of the wick is the low of the day. But the bottom horizontal line is the close of the day. The top horizontal line is the opening of the day. So we opened high and it closed low. Opened high, closed low, open high, closed low, open low, closed high. Okay? It's just how you do the numbers. There's a high, low, open, and close. Dividend stock talk. Is there a general description of your system, including software use? Out of tune. You're new here, dude. Okay, it's no software at all. This is Think or Swim. It's a trading platform offered through Charles Schwab. Okay? It got passed on hand to hand. Tom Sosnoff created a couple of decades ago, sold it to TD Ameritrade. TD Ameritrade got bought out by Charles Schwab. Now Chucky Boy owns it. Great, fine. A lot of perks. Love it. I've been using it for over 20 years. I love it. Anyway, the strategy, simple. Buy good quality dividend stocks, sell options against it using what's called a covered call with weekly optionable companies, and then collect a weekly premium 1% or higher. Hopefully that's simplified enough. I hear you, but you still didn't say when you want the dividend to be in relation to the expiration date. There's definitely a miscommunication here somewhere. All right. And I'm going to see if I can say this again with a little bit more clarity. The only reason, only reason I look at dividend stocks, number one, it tells me which companies are continuously profitable. Do I care about the dividends? No, I don't. Honestly, don't care about the dividends. Do I want to collect a dividend? No, I don't. Now, the dividend dates are represented by these little dots. Okay? Each one of these represents a company. Now, I like to buy the stock 2 weeks prior to the EX date on a Monday. If I hit my target, great. Do I care about the dividend? Don't care at all. So I'm not quite sure what you mean. Where do I want the dividend to be in relation to the expiration date? The expiration of the option? The expiration of the option is every Friday. Okay, every Friday. Because here it's on a Tuesday, but I'm buying it on a Monday. The option expires on a Friday. If I don't hit my target, I buy the next one. It expires on a Friday. If I don't hit my target, I buy the next one. I buy it on a Monday. It expires on a Friday. If I hit my target, great. If I don't hit my target, I do it again. And I keep doing it until it hits my target. I honestly, really, 100% don't care about the dividend other than the fact that it continuously increases. That's it. As long as the dividend continuously increases year after year after year after year, great. It's on my list. It's in my calendar. It's in my calendar, great. I want to look at it 2 weeks before, buy it on a Monday. If I hit my target, great. Do I want to collect the dividend? No, I don't. I want to jump in on a Monday. I want to get out on a Friday, and I want to collect the premium only. Okay, the premium is usually higher than the dividend. Let's do a quick example for a second. Pfizer, okay? Pfizer, the 26th. The dividend is 41 cents. Great. PFE. $29.23. The 29 is going for 35. 35 is a little bit less than the dividend. Okay. But it's over 1%. I honestly don't care about the dividend. You answered it. I wrote it 2 times. Okay, we're gonna. What stock is that? That's Pfizer. Does Valero have 20 years of increased dividends? Don't know. Someone else suggested it. Do you keep? I have no idea what you mean. Evening, oh, it's been a few days. Yes, it has. A quarter, same monthly, blah, blah, blah. Okay, Queen J, how are you? So if you buy the stock 2 weeks before they pay the dividend, do you receive the payout also? Queen J, it all depends. All right, let me go back here again. Okay, if I'm looking at Lowe's, I'm buying it 2 weeks before on a Monday. All right, I'm selling a covered call against it. If I buy it for $100 and I sell it for $100, if on Friday it's above $100, I'll be all back into cash the following Monday, and I won't do it again, and I won't collect the dividend. If I buy it on a Monday at $100 and Friday it's at $99.99, I keep the premium, thank you very much, and then I sell the $100 again on this Monday. Remember, the stock's at $99.99. Okay, it's Friday. If it's over 100, great. I'm out. If it's $99.98, I keep the stock. I keep the premium. Now I'm here for the 3rd time. I do it. I sell the $100 call option. If by Friday I'm over 100, then I'm back into cash. I can't answer the questions of tomorrow with the answers I have today, which means today is Monday. Today I bought a bunch of stocks. Great. Where are they going to be on Friday? I don't know. What am I going to do on Friday? I don't know. What am I going to do on Thursday? I don't know. Because the stocks continuously move up and down, up and down. That's all they do. They go up, they go down, they go up, they go down, they go up, they go down. Here we are right here. Well, where is it going to be on Friday? I don't know. But what is the chart telling me where it's going to be on Friday? The last 30 days, right here. 30-day bottom, 30-day top, more than likely. Not guaranteed, but more than likely. 30-day high, you have all these investors out there say, ooh, look at all that profit. Now, I'm going to tell you a secret that a lot of people don't know. It ain't a profit until you take it. It may look good on paper, but it's until it is spendable in your account, it doesn't mean anything. Okay, so if you bought down here, the 30-day bottom at 27, it's now at 29. That's a $2 increase. That is a 10% increase in 30 days. You take the profit, you don't take the profit. Totally up to you. But at a 30-day high, most of the time it comes back down again because that's what they do. They go up, they go down. And who decides whether they go up and they go down? You and me. Because when we say, oh, Pfizer's not worth 30 bucks, then we start selling. I'm going to take my profit. When it gets down here to 27, wait a minute, Pfizer at 27? Oh, hell yeah, I'm going to buy some of those. We decide all this crap. We do. The market maker, he just opens it up, whatever he feels he wants to open it up at. He has his reasons, whatever they are. Again, and we decide, is it worth it? Is it not worth it? Should I take my profits? Should I just wait and see? I have a very simple trading strategy. Number one, this is a no. 30-day high doesn't work for me. I like down here, 30-day bottom, 2 days to the upside, I jump in, I get my 1%, I get out. Okay? Comes back down again, look. 30-day bottom, another bottom, 2 days to the upside, I jump in, get my 1%, I get out. That's me. You guys got to figure out what you guys want to do yourself. Holy cow, 11:29, woohoo, another day, done. All right, I'm going to go through these last questions. I'm not going to look at anything else. Queen J, all right, she's answering that question. How do we get into, I missed all those. MPW, yep, rarely MPW. 2 weeks prior to what date? Your residence come on, oh, wait a minute, I already answered it, you said I did. To the EX date. Recon, thank you. Brian, are you just rolling calls and stocks is down big? If so, what's the delta you're rolling at? Okay, Brian, I don't pay attention to that. Seriously, I don't. Now, when I say it was created for a 9-year-old, it had to be simple. You're missing that. It's an easy word. Actually, it's a simple word. Simple, funny. Has to be simple, safe, predictable, consistent, and no way to lose. Okay, fine. Never buy a company you don't want to hold long term. Don't sell at a loss. Make sure it has 20 years of increased dividends, weekly options, and make sure the numbers work. That simple. Stop complicating it, please, because it does nothing other than just slows down the progress of the conversation. I don't look at delta at all. It has no bearing whatsoever on the trading strategy in which I just explained. Now, delta is big for other trading strategies, but not this one. Which broker is 8%? Well, I'm using Charles Schwab. Schwab gave you 8%? Yep. No, Charles Schwab didn't give me 8%. Charles Schwab is charging me 8% regarding margin. But do you borrow when you do covered calls, or is that some other trading strategy? No. You can use a margin to buy the stocks. You cannot use margin to buy options. So if you're using margin to buy stocks, you can sell the margin. You can sell the options against them, but you can't use margin money for options. Do you sell in the money or out of the money covered calls? That's a good question. It's all about the numbers. Now, when I say it's all about the numbers, what I'm saying is right now the stock's at 29.23. Well, at the money is 29.50. Okay, it's not 1%. 29 is going 35 cents. I'm losing 23. It's not making the money, so it's not really going to be the 1% on this scenario. It's all about the numbers. What are the numbers telling me? What is the chart telling me? The chart's telling me no, because it's at a 30-day high. All right, I bought Macy's at $19.50. Macy's is now at $16. Should I do a covered call? Damon, I really don't know what to tell you on that one. You have an opportunity to dollar cost average down, or you sell 4 or 5 strikes out of the money, something that you have some money coming in, or you just wait and hold for it to rebound. It's Macy's. It's going to rebound. They always do. Thanks for the explanation, candles, but I was referring to the red and green arrows on my spreadsheet. Oh, those! You mean these? Sell, buy. Sell, 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 buy, buy. That's it. That was easy enough. Recon. at the money. He's only interested in the 1% premium so that he can move to the next one. Yep, that's it. Thanks, I get it. I didn't actually sell Macy's covered call, but was wondering what if. Ooh, yeah, you got to wait for it to rebound now, or sell a covered call less than what you paid for it, but that opens you up to risk, and it all comes a risk-reward ratio. Now, when a stock goes down, I like to sell 4 to 5 strikes out of the money, so I'm not susceptible to losses as readily, but I did get burned a couple of times. I got burned really bad with Target last year. That was painful. Jessica King, no big loss, only 25% of my portfolio. Ooh, that sounds horrible. I mean, really, just flooding information without structure is useless. Out of tune, I'm not 100% sure what you mean. This is just educational. I mean, if you have a structure you want me to follow, fine. Let me know what it is. I got no problem following structure. Actually, I do. I hate people telling me what to do. Okay? But honestly, out of time, I have no idea what you're talking about. Seriously. Okay? I'm talking about covered calls. We go from one stock to the next. Does it make sense? Does it not make sense? What's unclear? If there's something unclear, ask me. I'll see if I can clarify it for you. What is the biggest risk here? Not reaching the strike price? Well, Alex, there's no possible way you can get away from risk. Risk is everywhere. If you stay home and stay in bed, well, you're missing a good day. You're missing an opportunity. You're missing the sunshine. You're missing a lot of things. If you buy a stock, well, the risk is it could go down. If you don't buy a stock, well, the risk is that you missed out on an opportunity, or that your money keeps getting eaten away through inflation or spending. You got to do something with your money because we're human beings. We're the only species on this planet that's got to pay to live here. So when you get to the retirement age, such as myself, the money's got to come from somewhere. Okay, most people take the money and give it to a money manager, and a money manager does this stuff. But a money manager is not going to give you close to 20, 30, 40, 50%. No way. Money manager will give you 5%, maybe 4% usually. Yeah, no. Take responsibility for your own money. Figure it out. But there's risk no matter what you do. Even if you don't do anything, there's risks in not doing anything. So life is risk. It all depends on how you look at it. Okay? If you're nervous about weekly call options, UV, I have no idea what that means. Hey, hey James, off topic question. Did you try Tasty Trade's platform yet? Is it geared towards option? I took a look, but I want to stick with my own thing, and I'm just saying single-mindedly focused on this and then helping people with this. Because I like the philosophy, help out enough people, eventually I'll be taken care of. It works out in the long run. I like to help people, understand what's going on. We've been screwed long enough as a little guy. I'm a little guy. I'm a nobody, okay? I went to school, graduated somewhere in the lower middle of my class, joined the service, had a medical leave because I got stuck with a nail in my eye, so I was unfit for military duty. They sent me home. I started my own manufacturing company. I don't do anything normal. Okay, I'm just an ordinary nobody. I have no professional training in this whatsoever. If it makes sense, fine, do it. And it seems to work fine, and I'm just sharing what I do. So if you like it, great. You don't like it, hey, more power to you. If it makes sense, that's a question you need to ask yourself. Does it make sense? I can honestly care less whether you join me or not. I'm just sharing my information because there are people out there that do appreciate this information and are profiting from it. Okay, now I don't give advice, I just give my opinion. My opinion on Pfizer, well, it's at a 30-day high. It's too high for me. So I say no. Don't get me wrong, I like Pfizer. Okay, when the numbers are right and the situation is right, like if down here, here's the bottom, 2 days up, yeah, I'd get in right there. Because certain things make sense to me. There are patterns. It goes up, it goes down. It goes up, it goes down. It goes up. Well, look at how many days it went up. Look how far it went up from here to here. Well, yeah, there's going to be profit taking eventually, in my humble opinion. That's why I'm not doing it. It's just the way it goes. Can do monthly and roll if need be. I don't do monthlies at all. Sorry, I do weeklies only. Real estate flipper. If in on Monday and out on Friday, why buy 2 weeks prior to the EX date? Good question, flipper. I have found in my years of trading that 10 days before the EX date is a good day to jump in for stock appreciation before the EX date. EX date's here, 10 days before is right here, but if I'm going to do covered calls, I'm going to get on a Monday. 2 weeks before it. Stocks have a tendency to go up 2 weeks before the dividend date. That's why if I'm looking at lows, I'm wanting 2 weeks before. If I'm looking at Pfizer, I'm going to look 2 weeks before on a Monday. 2 weeks for it to give it a chance to move up that 1%. Thank you very much. See you in 90 days. That's my philosophy. Jessica King. Damon, you have a nice... I've got a few myself. I was going to do more secured puts today, but chickened out. Jess. I do puts also. Okay. I've been buying monthly options on Siri. When it swings to my favor, I buy it out. I buy out of it. Okay, fine. Siri is a strong stock. Okay. I did Siri 3, blah, 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 blah. You guys talking to yourself. How close to the option's expiration date do you sell the call? 2 weeks. Why are dividends worth doing as a profitable option day trader? All right, Sam, I'm not a day trader. All right. Yes, I understand you borrow for the stock. You wonder if you sell the calls after you borrow. I'm not quite sure I understand that question. Anyone else not see CE? I have no idea what CE is. Certain comments. You're great. Appreciate the info. All right. I like to follow along. All right, Jess. Jessica King, he's reading some off YouTube, Facebook, Instagram. I appreciate you walking through the list. You're welcome, Alex. Dividend stock. Stocks going down is the risk. Well, stocks always go down. All right, so on out of here for tonight. You guys have a great night, and I will see you again tomorrow. Tomorrow, I love ya. Tomorrow, you're all